This is Jim Colburn of Commodity Research Group. I'm with Andy Lebow, also of Commodity Research Group, and we're here to talk about energy markets. To learn more about us, you can check out our website, commodityresearchgroup.com, where we post our podcasts and blog. We would like to thank our friends at EKT Interactive Oil and Gas Training for hosting this podcast. Check out their newsletters, podcasts, and learning modules at ektinteractive.com. This podcast should be construed as market commentary, merely observing economic, political, and market conditions, and is not intended to refer to or endorse any particular trading system, strategy, or recommendation. We are not responsible for trading decisions taken by anyone. Information is not guaranteed to be accurate. This is not an offer to buy or sell any derivative. Today is February 20th, and it's 2:49 in the afternoon. Andy Lebow, we're sitting here looking at a major virus. We've got locusts running all over Africa, and we have some presidential politics that look more like mud wrestling. And I want to know which disaster you want to take up first.
That's a tough choice, Jim, between the three plagues, right? Whether we're going locust, disease, or who wants to be the next pharaoh.
It's very biblical what's going on right now, I have to say.
It really is, and we continue to live in very interesting times.
We do, and Andy, we had the big three come out last week: the EIA, the IEA, and OPEC with their monthly oil reports, and they each shaved some demand, obviously, from their estimates, and I just want to kind of look at those, and maybe you can start with the EIA, and what did they do?
Well, of course, all these numbers are modeled off. I actually don't know what they're modeled off. I assume they took SARS and maybe some previous numbers and then put them in some kind of stew, Jim. But what the EIA did was they said that in the first quarter, demand is going to take a 900,000 barrel a day hit, which is a pretty big number. They revised downward by 900,000 barrels a day their estimate for global demand from just last month's report. And in February, they said, in second quarter, they said demand would decline by 400,000 barrels a day off of their last report. And then in third or fourth quarter, demand will normalize and grow. Net, they've got demand up 1 million barrels a day for the year. So still, not that bad of an increase if these numbers come in.
And Andy, some of that hit that's they're taking in the first quarter is due to warm weather.
Yeah, that's it. That's exactly right. The northern hemisphere has really not had much of a winter, so I think some of that's off the coronavirus, and some of that is off warm winter. But again, it's just a model. It looks like in reality, certainly Chinese demand is being hampered quite a bit if refinery runs, which is something that we actually can get a decent handle on. If refinery runs in China are any indication of where demand is, Jim.
Yep.
Those runs are down. One number for February was 3 million barrels a day. That runs were 10 million barrels a day relative to last year's 13 million barrels a day. I think some of the other numbers that are coming in off China is down like 1.1 million barrels a day on runs. But I think at least for China on run cuts, it may be peaking like right now.
It's a big number.
It is a huge number.
Yeah.
But let's get back to the big three.
Yep.
OPEC, the OPEC report, they're less. They cut demand less than what the EIA did. OPEC's got demand down 440,000 barrels a day from the last month's estimate in the first quarter, and then in the second quarter down 370. And they think this year the growth in demand was revised down by 230,000 barrels a day, again coming in close to the 1 million barrel a day number that the EIA said. And then EIA, they really went. They said demand is going to be down on the year 365,000 barrels a day. Their estimated demand. And demand will grow by 825,000 barrels a day this year, so that they really cut what they think for the entire year. But all three, seem to indicate that this is a first half problem, and second half things will normalize. Of course, we don't know.
Just a side point. Do you like one of those reports more than the other, or do you kind of just look at all three and kind of?
You mean in terms of accuracy?
Yeah.
Or in terms of, I think I read all three. I think all three are
worthwhile.
Are worthwhile to read, and it's good to average some of their numbers, because OPEC tends to go one way, the IEA tends to go the other way, and the EIA's models are usually not that great.
Yeah. So, listen, it's a hard task.
It's a hard task.
Yeah, as we know.
Yeah, actually, I know we've mentioned this in previous podcasts, but you and I attended a presentation by the EIA about their models, and they were pretty. It was pretty intense, actually. They really work hard at their models.
Yeah, definitely. They're better than what I would put out. Put it that way. So I read them. Yeah. So we have this idea that we're taking a hit in February and March, and then the hit starts easing up. It's still a decline, or is it?
Still a decline in April, and possibly into May, and then in June, I think things start to normalize, and we probably start growing on. We should be growing, or if we're not, it's unlikely that these million barrel a day numbers are going to come. Growth of 1 million barrels a day are going to come to fruition.
Yeah.
And again, we really don't know, whether this is going to become, a pandemic type of epidemic, or it'll peter out by the spring, which I think is what the market's looking at.
I was going to ask you, the market has come off really hard, and now we've bounced. And do you think it's a rational bounce, or do you think that's what do you think about that?
I think it's absolutely a rational bounce, because as much as these demand numbers are off, we're also seeing a concomitant loss on the supply side, and I think that's one thing that we had mentioned in our it wasn't in our podcast, but in Commodity Research Group's monthly report. We said we thought the market was giving too much emphasis on the coronavirus and not enough emphasis on what's happening in Libya.
And Libya is down to, they were over 1 million barrels last year. What are they at now?
They're like 123,000. They're down almost 1 million barrels a day. And, I think the market was thinking, oh, well, that's short term. That'll come right back. But, every negotiation has gone nowhere. And it looks like conflict there is, if anything, is still escalating. So, yeah, these barrels can come back when the blockades are lifted. But, it's not going to, it looks like it's not happening in the month of February. And I'd be surprised, it might not happen into March either. So, you're losing 1 million barrels a day of sweet crude on the market, and that has helped to soften the blow of the loss of coronavirus demand, as well as the warmer weather. So I do think, where say the IEA, one thing I completely disagree with it. They're looking at a 1.5 million barrel a day inventory build in the first quarter, and I don't think it's going to be anywhere near that. I think the inventory build is going to be yeah, I think it's going to be like less. I think it's going to be around 500,000 barrels a day in the first quarter, and somewhere around that, plus or minus in the second quarter.
And that's very manageable.
It's manageable, yeah, because
Right.
inventories were in decent shape. I mean, look, Chinese inventories are building for
Right.
crude, and
Yes.
they're probably building for products as well. But with runs being cut, they're not going to be built quite so significantly as we head into March and April. But yeah, 500,000 barrel a day build in the first half of the year, plus or minus 200,000. Yeah, it's manageable. That shouldn't be the end of that shouldn't be like low 40s crude.
Right. I was going to say we're four handle on crude doesn't make much sense to you. We're just maybe going down there and taking a look and then coming back up.
Right, exactly. And that's what we talked about, in
Yeah.
our monthly report. We
Mm-hmm.
said that we thought, yeah, there was a chance that WTI could take a look-see in the 40s, but we liked it coming back.
Mm-hmm.
And
What?
you know, mostly because the balances aren't as bad as what the market was looking at. The other thing, Jim, that happened this week is the sanctions that the Trump administration slapped on Rosneft.
Right.
That's going to it's unclear. Venezuelan production is probably around 800,000 barrels a day, but that ultimately too could have an impact on their exports. They had been improving. This could be a factor in their on the export side.
And why don't we move into OPEC? They were going to reduce production before all this happened. Have they been successful with the additional cuts or from the December meeting?
Yes, because of
Oh,
Libya,
of
right?
course,
So
of
Libya and
course,
Venezuela are two OPEC
of course.
producers.
Yeah.
So they sort of, yeah. I mean, they had now Libya can come back, but again, it's not looking like it's coming back anytime soon. Russia has been saying, let's wait and see whether if we need to cut another 600,000, or we don't. And I think Russia's being in the peace negotiations with Libya. Part of that, I think that they probably have a little inside information on, how that's going.
So why don't you lay out where inventory draws again for the first quarter and rest of the year? So would you say maybe
I
500?
think the first, for the first half, inventories will build, maybe 500,000 barrels a day, plus or minus a couple of 100,000. Second half, I think things will, again, it's hard to predict. I mean, actually demand could really surge in the second half, right? You get enough Chinese stimulus and enough, their desire to
Get the heck out of the
re,
house.
yeah, get
People,
the heck out of the house. Exactly right, amongst the population. But in terms of moving goods and getting things back to normal, you may actually have a surge, and we should start seeing a stock draw. As we head into the third and the fourth quarter. Again, we'll see where OPEC goes. I think one thing that's interesting and pretty significant, they know that they somehow at some point have to get out of this production deal that they're in. And we talked in our previous podcasts, about the June meeting. What are they, how are they going to get out of this and start increasing production? But now, they now that demand has been hit, and Saudi is, I think, was alluding to it as like a house on fire. Maybe they'll be less willing to really cut production or increase production. As we head into the second half.
so you don't see any OPEC meeting before the ordinary June meeting. You don't see
Well,
them.
if Libya comes back, yeah, I think they may meet. If not, no, I think that, they'll just, or if things worsen, if all of a sudden the cases start, it'll depend on the market, Jim, as always, right?
Yeah, of course.
If the market starts taking a real,
A
a
dive.
real nosedive, and then we get into the low, mid to
Yep,
low 40s, then,
they will meet.
yeah,
Um,
they may meet.
I want to move into the U.S. oil production, Andy. I guess when we were up at the highs, there was hedging going on. So,
Definitely, right?
right, yeah.
Definitely. What a,
So, so we probably shouldn't see a decline in U.S. oil production or a decline in the growth from this move unless it stays down. Is that,
from this particular move? No,
yeah.
unless we go back into the 40s. Yeah,
So what
I
is,
don't think so. Yeah, I would doubt that.
so
And
where,
as you said, they really took advantage of that spike. There were two spikes actually. The attack on Saudi Arabia, and then the killing of Soleimani.
right,
So you had two chances.
right, yes. And where are we with production now in the U.S.?
Production right now. This last weekly report had us 13 million barrels a day.
Mm-hmm.
EIA the EIA has us at 13.22 in February in their short-term energy outlook.
I
I
saw
don't
that.
Right. I don't think so.
I mean, it
They
means
have it
they.
pretty much flattening out for the rest of the year in the 13.2s, 13.1s.
Does that mean they don't believe their own model? I mean, right? Because we're going to get. I mean, we look at the weeklies that are much more model driven, and then we get monthlies that true those numbers up with a
Right.
with a lag. So
Right.
are they? It's kind of like they're.
Well, the weeklies are a survey, which they then adjust to they do adjust it to the monthlies.
Yeah.
And
The monthlies are the gold standard.
the monthlies are what you really want to pay attention to, but
Yeah.
unfortunately, the monthlies are, we
We
only have
don't.
November data. So
Right.
at
It's
the
a
end
month.
of,
It's
right,
lagged. Yep.
at the end of this month, we'll get December data.
So that 13.2 number, you agree, disagree?
I don't see, we're in the second week in February and we're at 13.0. Yeah, maybe 2 months from now, the EIA will adjust it upwards. But I think it's going to be 13, and I think I think growth is won't be robust this year. Can we get to 13.2, 13.3? Yeah, we could, but it's nothing like what we saw last year. Again,
Last year.
as you and I have discussed in these podcasts, much of the year-on-year growth has already happened
Right.
in a way,
Right.
right? The way the
Yes.
math it was during last year, and
Yeah.
now when you're last year the first half was low, so
And then
these numbers are going to look good relative to last year, but
right.
in the fourth quarter we really surged, so relative to like where we were in December, the
Got it.
numbers don't look good at all.
Yeah.
I shouldn't say that. We're growing.
These
Some people have production falling this year, Jim. U.S.
yeah.
production falling.
So this EIA number is definitely not a consensus. 13.
Totally not a consensus. I saw one number. I think they were talking about production going to 12.6
Mm.
this year.
Oh boy.
I don't think I don't think so. But that's one of the numbers out there, which it obviously would be constructive.
Well, even if you have a particular presidential candidate or two winning and banning all kinds of fracking, that won't happen until next year.
If
Right?
it happens, if it happens at all.
Right.
That's another plague that we could talk about.
Jeez. Oh man.
That some of these candidates are talking about, banning fracking, and one candidate is talking about banning U.S. crude exports.
Mm.
Could you
Yeah.
imagine?
Yeah. It would wreak havoc for sure.
And I think on the exports that he's trying to get an executive order.
Right. Yeah. So you don't have to go through the regular
So you don't have to
channels.
go through Congress. And in terms of banning fracking, I don't think it'll be an outright frack ban, but I think it'll be something like banning fracking on federal lands. And
Right.
if that's the case, then that's like 1.5 million barrels a day of
Well,
production.
I didn't realize it was that much.
Yeah, I mean, there's a lot, right?
Um,
And
so
and to say nothing about the natural gas, we fracture for natural gas production.
right. Yeah.
So, but there's less natural gas production on federal lands, much less
Right.
than there is on, for crude.
Well, as you know, we can't get any more natural gas into our state of New York because we can't build any pipelines. They're
Right.
hands, yeah.
Right.
So moving along into the springtime, gasoline is. What the heck's going on with gasoline? It looks like it's
Well, the cracks have really rallied big time
but not
here in the U.S., not globally, but globally they're better. I mean, refining margins they're not terrible here in the U.S. They're bad in Asia. I mean,
right.
and in the
Of
Med,
course.
horrendous. They're horrendous, and demand is Eastern Hemisphere demand is poor, and in the Med, you lost all those Libyan barrels.
Right.
So the differentials have gone crazy, and demand is kind of soft. But here, we've had refining issues. Big one, we lost Exxon Baton Rouge had
Jeez.
a 500,000 barrel a day refinery went down. The crude units weren't injured. Oh man,
They're probable for tonight.
yeah, they're
Yeah.
probable. They
Yeah.
weren't injured. They weren't damaged.
They
But
weren't
that's
damaged.
another like 3 or 4 weeks that that's going to be down. We're going into turnarounds. We did have a decent demand this last week, and the seasonality. I mean, there's all this stuff going. There's some decent things going on for gasoline. However, inventories still are. You know what, Jim? Inventories are around average for
For
gasoline.
gasoline.
Yeah, the inventories are 259 million, and the 4-year average is 256 million, and days supply are the same, 29 days.
Mm.
So we're okay on gas, but certainly it's making a big move relative to diesel.
I was going to say diesel. What's
Ugh,
the price action is awful.
horrendous.
Is it?
Yeah,
Do you think people kind of bought ahead of the IMO 2020 and they're just kind of?
totally.
You think that's
Oh,
so? It's showing
totally.
up as weak demand and they're just working off
Yeah,
stocks.
totally. I think there was that. I think there was a big spec position
Right.
by everybody,
Uh,
really probably shouldn't even be in oil, trading oil, but they read this stuff and they go, hey, we
right.
got to get in this.
Right.
And you know how it works, Jim. We've
Of
been
course.
seeing it. We've been seeing it for 35 years.
Well, that's what I was trying to think about. How do you think about this virus when you hear the news that okay, the virus is gone away? It's too late to buy any. It's like you have it. It's just the markets make it very difficult for people
Yeah.
to
Yeah.
trade.
There is some efficiency in markets. It's you look at the equity market, they've shrugged off the virus, but we've had real effects. I mean,
Yes.
it really is. Chinese demand is going to be significantly down.
Right.
So that at least there is a real effect. The market does to at least the oil market seems a little. Maybe not. I mean, there's that app that everybody has showing the death count and the cases,
Yeah.
right? And if it
Yeah.
grows, if the
It's crazy.
it's crazy. But
Trading off it.
but these algorithms are trading on it, so
Right.
you got to somehow stay ahead of it.
Yep.
But let's getting back to diesel.
Yeah. Diesel.
That's the other thing that the weather's killed. Right?
Yes.
I mean, we still burn heating oil here. And in fact, Jim, it did my heart very well. I mean, my heart skipped a beat when we were up at global headquarters in
Yes.
Darien.
Yes.
Coming right down the street was a heating oil
Oh yeah.
tanker truck. Right? You saw
Oh yeah.
this? Yeah, that was so. We still use it.
Well,
Uh,
yes, I still have heating oil. I'm
and
not
you
sure.
have heating oil,
I
right?
do. I do. There's not a lot of distributors left, but I get good service. Okay, so we had this move up and then a move down, and I'd say I want to talk about options a little bit here,
Yeah,
Andy.
let's definitely talk about
We're
options.
we're running around 31%, 30% from the first 2 months vol, and we had gotten up close to 40% on 40. I think February 3rd was the high, and there's the if you look at the open interest, it's not crazy. It's very spread out, and it looks like if you look at June, where's all the open interest? It's in the June and December, say 45, 50, 55 puts, some 35s, and then in the calls it's 60, 65, 70 with some 55s and 75s. So that's also June and D. So it's not really an interesting market. I don't think it's and the CSO same thing. We see flat puts they have about 10,000 open interest on the June through D spreads, and from April, May, June, July on the calls it's the plus 50, plus 100 CSOs, and these were put on. I think these were put on a while ago. So not a lot to say. I just wanted to get people updated on that. What
You
else?
know, we also need to talk about the curve.
Yeah, the crude curve seems to have it's in contango up through July, and then it goes backward dated. Is that right? Is that the way you see it?
That it goes,
So I didn't see what happened today, but it
yeah,
was
yeah. Right. It's
right.
in contango in the front,
Yeah,
and then the back, yeah, and then it goes backward dated.
but June,
Uh,
July, is it June, July, and August have about the same price?
yeah, I think so. I think that's right. I haven't looked at the close today, but I think that's about right.
Yeah. So it's kind of that's where people are thinking we get back a little closer to normal.
Yeah, and I think that there are a couple. What's really interesting is the Brent market. Not surprisingly, because we lost all that sweet crude.
Oh, right.
The Brent went from contango to pretty good backwardation now in the front, and actually the whole curve pretty much went backwardated, and what was everyone was pointing to, particularly on the a lot of commentators in the press were talking about how Brent had been in contango and how bearish that was, and that the end of the world was nigh.
Yeah.
And
Yeah.
sure enough,
Yeah.
the market like picked itself up, and said, "Wait, we need some. We're missing these barrels."
So let's talk about prices from here. We're around WTI is around 54 or something right now. I don't have a screen in front of me, but what do you?
50, yeah, less than 53.87. So let's call it
Oh,
54.
okay, so what do you think going forward? I'm putting you on the spot because
Oh, great, Jim.
we
Thanks. Well,
we we
here's
know
what I
nothing.
think. Yeah, here's really what I think. I think if you look at this is actually a pretty good stat. The 5-year average for WTI is around $53 prices.
5 year?
Yeah,
Jeez,
yeah.
we've done nothing.
We've done nothing.
Yeah, that's like this is
Right.
where
I
we are
mean,
now.
the market's been all over the place over the
Yeah,
last, over the last 5 years, including taking
right.
some heavy pounding, and then
Of course.
coming back, and then a couple of spikes here and there. But
Gee, I could have sold volatility all those years ago.
you could have.
I'm
You
kidding. I'm kidding. Don't do it. Don't do it.
don't do it.
It's just the
So anyway, look where
okay.
we are.
We're right here.
If you want to say that mid 50s is an equilibrium price for WTI, I don't think you'd be far off. So, where you go from here is, if I had, yeah, I think we're gonna. I think the market as we head into the second half, may get itself together, and we could see some upside. Could there be a 6 handle on WTI? Yeah, there definitely could be. Could there be a low 40s? Well, if the virus gets worse, I guess so. But I think you look at the inventory numbers, and for
So,
now, this is a good price.
yeah.
So what do you do with that?
Right.
This is really a good price. And one thing that has been really interesting, Jim, for us holdout fundamentalists,
Yes.
and don't tell anyone that I'm secretly a technician,
No.
but
No.
for us holdout fundamentalists, the prices have actually been correlating very well with inventories. And you saw in the fourth quarter, global inventories were drawing, and that's what that rally was all about.
Mm.
As we had we had a good, solid fundamental rally in the fourth quarter
Wow.
that got taken out by the coronavirus. So, all right, if stocks build, yeah, maybe the market could be under some pressure here in the next few months, and then as we head into the second half, you could start seeing it gaining its footing and coming on back. I think a price collapse, looking at all the fundamentals, I can only see that if if the virus becomes a pandemic.
Right.
And that's to
We
be
think
determined.
that's a less likely outcome, but we really don't know.
We don't know, no, but yeah, we
Yeah.
don't know.
Who
And
knows?
neither does seemingly neither does anyone else. Maybe the experts have a better hand. Hopefully, they have a better handle on it than you and me. Two oil guys.
Yeah.
Or the guys on TV,
Right.
but
Jeez.
they don't know either.
No. Okay. So, in gasoline or diesel, which one has a better? If I said you have to buy one of them. Which one would you buy?
You're giving me
Is
like a
that?
widowmaker choice?
Yeah, I guess.
You give me,
I
wait a
don't want to.
second. You give me a heat. You give
Which
me a
one?
heat to gas choice.
I
All
hate to
right,
say.
I'm gonna go. I think diesel will do somewhat better than gasoline over the next couple of months.
Wow.
We're heading into it is planning season. There's always a shot for the end of the season. An end of the season cold snap.
Mm-hmm.
Um, if things start moving out of China, diesel demand presumably should pick up. So yeah, I mean it's fighting seasonality somewhat for gasoline, but there's also a counter seasonal rally for distillate that's usually March Aprilish.
Okay.
But the one thing that I would advise anyone listening to this podcast is never trade heat to gas,
Right. Yes.
which is the one of
Yes.
the great widow makers, as is I think as shown again the March April natural gas.
Yeah. The other way. It went
The other way,
yeah.
yeah, that
March
one,
went
right?
under.
Another widow maker.
Yeah. Okay, Andy, good job. Anything commodity research group.com is us. Check us out. What else? Anything else, Andy?
You can reach us at Lebow at commodityresearchgroup.com. That's my email address. Jim's is jcolburn at commodityresearchgroup.com. And if you have any questions on this podcast, feel free to reach out to us. We also do metals. We have the top-rated base metals analysts working with us. And we now have a quant working with us.
Yes.
So if you have any quantitative analysis that you might want done, hit us up.
Definitely. Okay, thank you very much, Andy. Our next podcast, we try to do them right around the time when the big three come out. We were a little late this month, but we'll be on track. We should be on track by next month.
Right, and I think over the next couple of months we're going to have some great guest stars on
Terrific.
our podcast.
Sounds great. Thanks, Andy.
Thank you, Jim.